get started, as people continue to, well, Leicestershire and Stoke, hello everyone. Shane from Leicester, I don't know if you're under lockdown as well, are you? Okay. So welcome to another one in the series of webinars for the LIBF Center for Digital Banking and Finance, which I'm delighted to be a part of. We set up the center to provide fintech insights on new developments and their impact on banking and financial services. And it's been an amazing journey, and we're getting such wonderful interaction with our community. So you can find more information at digital.libf.ac.uk, and I'm sure the team will share that information with you as well. So today's topic is digital leadership in difficult times, and we'll explore what's happening in terms of COVID, obviously, and a few other things that are happening in the industry. And although I've spent most of my life helping SMEs find money, helping fintechs connect with tier 1 organizations, which I'm now doing with community banks, and lecturing on the subject, our guest today, Carlo Gualandri, and I should say this appropriately because we are both Italians, who's the founder and the CEO of Soldo, has had a different journey and many interesting weaves along the way, Carlo. If I'm correct, mobile, gaming, advertising, some in the telco industry. So I wondered how you came to leave all that behind and decide on the journey that was Soldo, and why in the UK as well. So shall we find out more about you and your background and about Soldo?
Yeah, absolutely. Well, first of all, I always leave everything behind. Paradoxically, Soldo is probably the single thing most similar to something I've already done that I've done in my life. I tend to do one thing, and typically whatever is the thing is some kind of problem that can be solved, or market opportunity that can be addressed and created by some sort of change. I believe in change. Without change, there is no opportunity to create space for something new. And typically change for almost everything I've done has been driven by the impact of technology, digital technology, and sometimes also in regulated businesses by the change of regulation, because in those kind of industries, that's the most important element in empowering and defining what the future is. So as you can see, because I can't hide behind, well, at some point there will be filters on this as well, but I can't hide behind my video. I'm not a millennial. I'm a millennium entrepreneur. I used to be a millennial in the last millennium, but it's sometime past now. So I've done a few things. As I said, many different industries, because I like once I've done in or worked in one to look for new challenges and then to learn something new. It's always about a journey of discovering and learning for me. And so once you've done something, well, the curiosity shifts to something that you've never done, rather than repeating the same. As I said, Soldo is as a fintech is somewhat similar. One of the things I did was creating one of the first challenger banks in the first generation of challenger banks. That was back in '98, where the big change was you can do banking by connecting your PC with a modem. Really, it was the time of the modem, the thing that whistled when connecting, and do banking remotely instead of going in a branch. And that became one of the first challenger banks in Italy, that then evolved to become a successful bank that today is a very successful 7+ billion listed entity. I would say still in part perceived, in part really is one of the most advanced and technologically advanced banks in that market. But the reality became very successful later on, doing not really so innovative things, but very traditional asset management and other things that made a lot more money. But at the very beginning, that was the thing, and it was way before the regulatory environment in Europe started opening to the competition. So I did that with a bank. We really created that with a bank, and it was a bank in its own right. But then I did a number of other things, and coming back to Soldo, in a way, Soldo was the result of that experience, and I always remained into financial services, following and thinking and looking at things that were happening. Then I also did, after advertising, media, telco, and a number of other ventures, I worked in the world of gaming, as in gaming with real money. So lotteries to start with, state lotteries, and then later on more modern forms of gaming, online gaming, always on the side of fully legal, regulated industries. So I got a concession. I was fully white, because that's a market where there is a wide range of flavors of how you do things, but I always did it in the proper way in the markets. And the reason I'm mentioning that is behind online gaming. Forget for a second the fact that the ultimate goal is to allow you to use your money on a game. I'm actually totally not a gambler myself. I had to learn it, and I played a little bit. I'm also a complete ignorant of sports, so can you imagine me having an opinion on things like soccer or betting or things like that? So, but I was interested in the logic behind. And underneath those things, basically you handle people money, you receive people money, you get these deposits, you allow them to be used in specific kind of transactions, that's gaming, but that you get money back again, and sometimes the money go back to the customer. I'm saying that because you are subject to more or less exactly the same regulation as an alternative banking supplier in the world of payments. So the original experience as a bank, there was a lot more focused on traditional banking and also stock trading, because it all started like a European version of E-Trade, and then it expanded to become a full bank. And this experience brought together the concept of money is a digital asset. It's actually, it's been for a long time, non-material. Yeah, the fact that you translate a concept like money in a piece of paper is an abstraction, because it's not the piece of paper, the money. Piece of paper is just the representation of that. And how money, that being immaterial, it's eminently suitable to be digitized, poses so many problems in being handled and controlled, when it should be instead very, very easy to manage that side of the problem. So it all started with the concept of, if you are in an organization, the money of the organization sit at the center, but a lot of people need to access that. It could be your family, where a lot of people need to access the money of the family to buy food to put on the table, to buy a film to see in the evening, to do whatever you want. It could be a company with the various ways a company spend money, and that's why we entered into this world of spend management. Basically, any company spend money to make money, spend money to exist. Anything they do end up by moving money somewhat. But within organizations, I'm stressing the concept of organizations, because if you are just you, it's easier. Your money, you decide, you execute, you don't have to answer to anybody. It's almost too simple. But in an organization, typically you have a multitude of people. Some deciding, some implementing. I take a business decision, somebody has to pay because of that business decision. Somebody else has to account for that expense. And I don't implicitly, I cannot trust anybody, because we're talking about money. So it is supposed that within a company, money is controlled in a proper way. You just don't leave a bowl of banknotes in the meeting room. Anybody who needs anything can take it from there. So you need a lot of control and auditability. All these things are big challenges.
Can I ask you, so you've I think you've gone on record as saying that currently Soldo is like the Office 365 for money when it comes to businesses. But is it right that you started out doing it for families and then you had a pivot at some point?
It's no, it was not really a pivot. The thing is, well, we are still doing it. Nobody knows because we don't want to mix up the two things. But yes, we are still doing it. Actually, I would not leave. My life is complex enough that I'm a big customer of our own product in my personal life, in addition to being a customer as a company. It's just that we started testing the concept of organization and delegation of payments within a consumer environment because it was we got the license to do that. So issuing consumer cards is slightly easier than issuing commercial cards. So we got it before and we started playing with that.
Right.
And also because it was easy to start experiment with the dynamics of group handling of money within a consumer environment than within a business environment. In the business environment, I felt you should come with a more mature solution. So it's not by far, but we started playing with a family product probably 9 months before we got in the market the business product. By then, we decided that business was absolutely the thing we wanted to do, and so we basically de-emphasized completely the family proposition. That's still there. It's just that you can find it because we did reverse SEO to make it not so evident, because we didn't want to send mixed messages to the customers that couldn't understand what we were doing. But it's never been stopped. It's always been up and running. And actually what ended up is many customers of Soldo ended up saying, telling us, well, I would really like to have something like that for my own personal life. And we said, well, you know what? It exists. This is the address. You can go there. But it's just kept it as well, as a secondary kind of product. We don't really don't want to identify it. It's already too complex to be identified with one category. Can you imagine more than one? And our real focus is all on business and has been on business for the past 3 years and a half. So
can I ask you, Carlo? You're helping people to control their spending, and obviously, you know, as you said, you've been known to call it the Office 365 for money, and you integrate with a lot of different packages. Just in your opinion, in terms of digital, especially within the UK with open banking, and of course with PSD2, but with the CMA coming down saying that we need to get back to a better solution and more personalized solutions for SMEs, for example, in this country, which I'm sure will come with SMBs, for example, in the US, is there a danger that some of what we're seeing coming into the market, we're seeing so many different banks coming into the market purporting to be for SMEs, so many different electronic funds transfer organizations, so many different integrators of accounting packages, all knocking on the door of the SME. Is there a danger that some of them, and a lot of them are first-time digital leaders, are jumping on a fad or a bandwagon, and the SME might lose out in the end? And will we see some sifting out in this market?
Yeah, I believe so. The problem is there has been a very deliberate trend from the European regulators to open up this market to competition. It started in 2014, and e-money is even older than that. PSD1, e-money predates, as a definition, predates PSD1 by, I think, 3 years. And the whole concept was we want to open up this market. This created, I believe, the most liberal and the most developed and competitive financial services market in the world, because you have people who can really compete with the banks. Alongside that, a sort of another message passed, that is, you can build these things, but the regulated side of it, all the obligations, all those things are not really so important. Sometimes can be just thought of a necessary evil, but in many cases that can just be disregarded because they're not so important. The reality is it never ceased to be important. If you work in regulated businesses, you know that there is a, let's say, sort of a radar threshold. If you are small enough to live below that thing, in reality, you can do a lot of things and nobody really cares. Because the world is big, it's complex, and if you are just messing up with a handful of customers, well, you shouldn't, but no big deal. But if you become a real entity, so if you want to really have an impact on the market or vice versa, if you are having an impact on the market, then there are no excuses and you cannot cut corners and nobody's giving you a discount.
Yeah.
So the idea that building a fintech thing is easy, I think has been a little bit misleading, and in part has been perpetuated by a segment of the industry whose goal was to basically suck money out of these people. Please create your own fintech. Come to me. I'll do all the boring stuff, banking. You pay me, because at the end of the day, you're just spending VC money or investors' money. You pay me, but you will have a great future. In reality, not many will end up or have ended up having a great future. It's like saying, go to war, I'm selling you the weapons. I'm actually selling you, I'm selling you and your opponent the weapons. So I'm always okay. So the idea that this thing is easy has created a situation where too many people, well, I don't want to say two because otherwise it looks like I don't want other people to enter the market, but I believe probably more people than they should have happened to be proposing products in the market ended up doing that. Confusing messages, all these people saying we are a bank when you are not a bank. I never said I'm a bank. I don't believe, I'm not a bank because I don't want to be a bank. I'm proud not to be a bank, because if you knew what it meant to be a bank, you wouldn't want to be a bank. If you were doing my job, other jobs requires being a bank. But messing up all these messages and just thinking that because it's easy to put on your website an app and a card with your name, because behind you somebody is doing everything, I think sort of gave a false impression that this is something that has where the barriers have gone down. The barriers have not gone down, and only not been enforced at certain level, but will later on. And now, as always, the real danger is the regulator can be very permissive one day, and then the pendulum swing, and they just go crazy. Look, the FCA.
I was just going to say in that spirit, and also we were speaking earlier about some of these new businesses that felt the blow of Wirecard and the FCA coming down saying, no, you have to stop trading and hand back the money. Is this one of those instances where someone who's, maybe not possibly a naive digital leader for the first time, but that alongside COVID, where in fact the fintech should have been stepping up to help get the money out to the market, to help people manage better, they got hit blindsided with the whole Wirecard thing.
Yeah, that's one thing. But if you are a regulated entity, you've been seeing the FCA freaking out about all the, about the way entities are safeguarding clients' money. Now, if there is one fundamental thing in being a regulated entity where the whole point is you are regulated because somebody can give you their own money and you can hold the money and do things with the money. That's the whole point. That's a reserved activity. You need to be regulated to be able to do. And then the FCA is now doing research and doing things and letter to the CEOs and emanating all sort of specifications on how you should ensure that the funds the customer is giving you are safe and safeguarded. When I started seeing all this, I started wondering and saying, why are they saying all this? Everything was obvious. Obviously, you cannot intermingle company money with customer money. You cannot play with them. You must keep them safe. That means the holding customer money is a cost, is a big cost, is a big complexity, is a big pain. But that's the way it is. So the fact that they are starting to do this is giving me the impression that very probably a lot of people were not thinking that that thing was so serious, was so complex, and was so costly. So they've not factored in all these things when they decided to be a cool fintech. And now the regulator is starting to freak out. And typically when that happens, they will all do, yeah, exactly, something like that. And so what is the point in giving, yeah, more than the founders, the market, the impression that everybody can build some a thing like that, a fintech thing, when then the only thing is curb back the expectations, because in reality is a much tougher and difficult world than you could have imagined. So I believe there is a balance. A lot of competition is good against the normal banks, but the reality is the threshold to be properly able to compete in a regulated business is probably higher than it's been perceived. In other businesses, it's not. It's just a choice. If you want to be in a normal business, no problem. If you want to be in a regulated business, you have to embrace the philosophy and the concept of what's behind regulation. You cannot just cut corners, because it's not a long-term viable strategy.
Not at all. And I think that some of these, you know, some of the guys who were able to lend, who were this new digital offerings or relatively new, also ran out of money. I saw Tide the other day is now not doing anything on the stimulus packages anymore for COVID in the UK, because they've run out of funds. And some of them have had to let people go. Some of them have had valuations that have gone through the floor. What would you imagine, or what advice would you give, or what characteristics would you look like in some of the people that are leading these businesses? And for the first time, they've got to tell, you know, 150, 300, 400 people, I'm sorry, but I need to let you go. And tell shareholders that the valuation, have that conversation about the valuation tanking when they've just raised potentially another 60 or 80 million pounds. What would be your, how do you think they might be feeling? What would you say?
There are more sides to this, more aspects and point of view. First of all, I believe that hiring people and then having to let them go is an incredible tragedy. I believe that as an entrepreneur, the assumption of responsibility you are making every time you hire a person, you possibly have convinced somebody to leave the job they had before, and we're not necessarily only talking about kids who, if everything goes badly, will not buy the next iPhone, but will wait one more year. But people, normal family, this is serious stuff. So hiring people and then saying, you know what, I have to let you go. I read the letter to the employees of a company called Brex in the US when they just closed around valuing them, I don't know, almost 3 billion, 2 point whatever. And like 2 weeks later, they were leaving, they were letting people go with, well, that's the US, something like 1 week advance notice. So this is your cardboard box, get out. I think that's a very, very painful thing. And the question is it really the environment? Is it really something that happened, or you have a responsibility on that? And I'm saying that not because COVID was not like something coming out of nowhere and hitting us. That's for sure. And certain companies were hit really out of nowhere. This big thing came out, hit them in the back, and there was nothing anybody could have done. So of course, in that moment, you must look at your company as the thing that must survive. It's like it's biological. If you fall in the water and the water is cold, your body starts stopping circulation to the extremities, and all the way concentrating circulation and the heat of blood only on the vital organs until even that is not enough. And you could say that the wolf taken in the trap and gnaws his arm off. Better to cut my arm and get free rather than die like that. So a company end up having that's business. It's nothing personal. A company must survive and must do whatever is necessary to survive. That's okay. But
how was it for you at Soldo as well?
Well, yeah, but I was saying, but two things, two buts. Okay. First of all, investors in startups know what they're doing. And if not, they should know what they're doing. They're playing a very dangerous game, very high reward and very high risk. So first of all, this is the thing. I don't think you should protect the investors as much as you should protect the employees and the people who invested in the company. Second thing, everybody investing in startups up to now have been living in a bubble. We all know, or actually I hope we knew there was a bubble. I've seen more than one bubble, and the burst of the bubble. Well, that's the wisdom of age, perhaps. So it was clear that all these valuations were based on nothing, and it was very clear that the same VCs that yesterday were pushing you to higher, and do whatever. Growth at any cost. Who cares about the money? Are the ones that one day later switched into black swan mentality and come back to you with thirst for blood. Every single VC come back and say, okay, let me see how many people are you firing. I want to see that, especially the US mentality for this. Immediately cut people. And that's when it's become difficult because the thing is, are you cutting people just for the sake of showing you have the balls to do it, just because your investors or your board is panicking? Are you doing that because in reality it's a survival thing? Are you destroying value doing that? Or are you only doing it so that somebody will can avoid wasting $1 million, but you are ruining people's life for what, in the context of the thing, is not necessarily so much money? The fact that valuation went down, well, come on, who believed in those things? Valuations are all abstract things. So yes, I'm a unicorn, and now I'm a half a corn, and tomorrow I will be a bicorn. Oh, okay, all that's we know the value of it. So I think it's a mix of things. It's difficult. Sometimes you have to do it. When you have to do it, is incredibly painful. You need to feel as incredibly painful. Otherwise, you are an irresponsible leader. And leaders must be responsible. Sometimes many of these tragedies happens because because of stupid reasons and no real reason. Sometimes they happen because you've really been dealt a bad hand, and you have to play that hand, and that could be very painful to do. I don't think it's easy, and many times investors have their own way to look at this, and it's difficult as a founder or as a CEO, and sometimes you don't even have the actual power as in control of the board to be able to oppose to certain things, but there must be a dialectic. There must be a challenge between those two things. Otherwise, you will be just following the whims of the investors. And let's not forget, investors deals with money. We build companies. We build companies creating value and involving people. In my book, building companies, creating value and affecting in a positive way people's life is one thing. Money is another thing. You have to decide which world you inhabit. I inhabit this, and I know the value of money, for the good or for the bad. But let's not mix the two things. As far as ourselves, well, yes, we were affected. A big thing, I would say probably the single biggest use case for spend management has been travel and entertainment, so business travel within companies. Obviously, we saw that switch off all over Europe in a matter of a couple of weeks, 3 weeks at most. So going from whatever it was to zero. Because at the moment, every single country entered in lockdown, of course, business travel disappeared. And that was well, frightening in a way. Two things happened. On one hand, I very early on recognized, but just because I've been there already, recognized that the word of let's grow at all cost and all these things I was discussing before, evaluation, all these things, was probably going to end in a matter of a couple of days. It's like we have wind from the west. I'm sniffing it, I'm seeing it, it's changing. We will have wind from the east. It will be in our face in a matter of an hour, and the storm is coming. So you start seeing all the signals for this in the world of financial. On the world of money, tend to anticipate things and sometimes also to amplify things. So the message was very clear, and it became very clear in a matter of a couple of weeks. Where everybody was rushing to be the worst doom predictor and things like that. And obviously that meant if you had no money, it would have been a very tough moment. If you had a little bit of money, then money had become the most important thing. So the very first thing should be to be very disciplined. So yeah, we cut everything we were doing, every single expense. We got to first cutting every non-necessary, then necessary, then we will only use paper in the printer on the other side, so we use both sides of it. Then we sold the printer, then we revoked the office rent, and we no longer have an office. Well, joking, some of it is actually true. Not all the offices, but some of the offices were just cut. People, well, in Milan, my entire Milan office has been cut, and everything that was in there is actually sitting in my home there in a big pile. And then we'll see in London, of course, and the biggest offices, we still have them. So cut every single cost, because every pound you spend, or a euro or whatever you spend today is not coming back. So keep the optionality of sitting on the money and not of spending. The next thing was what we were to do with people. Because of course we were looking at with the money we have, the internal metaphor I've used is we are now entering into the desert, and this is the amount of water we have. So until we get at the end of the desert, and there is no oasis in between. The oases have been closed because of COVID. No investor money is present. So with the money we have to get to the end of the desert, otherwise we'll die. So you start saying, okay, having cut all the cost, now the only remaining cost, big thing, at least for us, it was people. And then when there was the moment to also do that kind of thing, I did what I think should be the normal analysis you do in these cases. That is, play this game. Think of yourself in hindsight 2 years from now. Say, okay, this thing, whatever has happened, well, unless it has wiped out human population on planet Earth, will have been gone in whatever way. So we will survive. There will be a life after COVID. So businesses will still exist, companies will still exist, will still operate, will still spend. So if in hindsight I was to look at my company, would I do anything different? You can say that if you apply this criteria and you say, well, would I invent Uber? Would I invent even worse? Would I invent WeWork next year? Well, probably if you were challenged by such a question, you'd say, well, there are a few things that probably would be better than inventing Uber next year. But when I applied that to us, you know, what I got back was, well, you will need Soldo, and you will need to build the same thing we've built. And building those things 2 years from now will cost the same amount of money we spent and will require the same amount of time we spent. So basically, if we die, we will have to be reinvented exactly in the same way in order to do what we need to do, that is create value by simplifying and helping companies bring spend under control. So I believe in our mission, and I believe that somebody has to do it. If we die, somebody else will have to do it, but will have to be like us. We'll have to do and go through the same things we went through. So in a nutshell, we should not die. It would be a waste for us to die. There is no reason. There is no change in the environment. It's only a tactical problem. It's only a temporary problem. And given that most of the value in our company is people, because that's at the end of the day what we've built. When we say built a thing, it's not that we've built a skyscraper, then we can die, the skyscraper remains like the pyramid. It's a people thing. We should not. Actually, even more, post-COVID, what we've been saying will become even more important. Our proposition will be even more important. Can you think of anything more important than keep control on your cost, money, avoid wastage, and create efficiency in the processes in the world post-COVID? For us, it will be a big acceleration in the perception of the importance of what we've always been saying to companies, and we were prepared to spend a few years going that and educating the market about the value of our proposition. And now it's been put front and center because everybody is obsessed by keeping control on their own money, because that's the most important resource. Nobody can forget that. So it's not just that we should survive, but we have a lot to do, because for us, it will be even a bigger opportunity. So that's how I decided that no, we could not afford to fire people. Yeah, of course, if there was no alternative, as we said, better to cut my arm and be alive than be dead with all my harms. But if there is any other way, it would make a lot of sense. And also, in terms of value, it would make a lot of sense. Firing people would mean affecting our value because of all the money we spent to build this thing, and then we're throwing it away. So I fought for that, and so far we've been able to survive. Actually, everybody was put to work. The goal inside the company was every single pound we are spending outside, we should not spend. And if we are still spending, we should not spend and do the same thing internally. So everybody was put to work because every single additional pound of revenue was a pound to justify the salary of somebody. And the reality is we were able to resist. In terms of the market, a number of categories like T&E went down, some other went up as a sort of automatic rebalancing, because companies needed to do things. If I don't go around to buy stuff, I will buy stuff online, and so some other categories went up. We created an entire line of product for COVID, because the emergency created new spend or new money management challenges, and so we ended up creating products for governments, to feed the families in case in areas of crisis and things like that. And well, so far, cross finger, knock on wood, always, but we've been surviving, and we were able to grow, not grow as explosively as we were doing before, but of course spending a lot less money. But we constantly grew, and we are building all the products that will be fundamental for when we will restart. Then when are we going to restart? Who knows? It could be the fall, it could be the beginning of next year. We'll have to make sure that we survive. Of course, we'll try to raise money. Valuations will be whatever they are. That's life.
It's very interesting that you say that, because I remember reading about what you were doing, I think in Italy, in terms of helping with the crisis. And I'm involved with a digital identity company in Barcelona, and they stepped up with the government and the hospitals to get both the stimulus money out, but also to get the testing and everything sorted out with identity. So that ability to be genuinely agile and to be able to move, to morph into, or to create these new products while you're cost cutting, and presumably getting the consensus and the buy-in from the people in your organization, some of whom potentially were probably feeling quite frightened and concerned about their futures, their financial futures, but also, you know, their livelihood. If they've not, and again, neither of us are millennials. We both had the benefit of hindsight, having gone through, in my case, I think 4 recessions. You and one of them as a self-employed, you know, with a limited company. I still remember that feeling. So you can empathize and you can imagine with what people are feeling like. But as somebody who has borne the scars and, you know, gone through it in a logical, successful way, I feel like you're in a much better position than some of the folks who just set out and maybe they're in their 20s, now they're in their early 30s, with not the leadership experience, not the experience of having gone through something really cataclysmic financially or physically. And yet they're being faced with these people who are in their organizations looking at them for a way forward. So I can only imagine that they must have been having a few sleepless nights, if not more, thinking, how did I get into this? Why did I get into this? And what do I do about it? And is that a time where you get some of what I call the gray hairs? You know, you bring in some of the people who have had the experience also to help you through that? Or do you just carry on talking to your investors and go it alone? You know, I would love to have been a fly on the wall for some of those conversations. I think someone asked in the chat also if you feel like 12 months ago, digital leaders' skills would have been a different skill set to what they are now. Has that evolved at all? That was Colin.
Well, I don't know. I have to say, yes, a lot of people probably was facing difficult decisions for the very first time, and probably not much help. By definition, investors can only be helpful up to a certain extent, but there is an implicit conflict of interest. And I've been discussing this anecdotically with some other people who ended up being in a similar position. I have to say, we have ended up with a handful of redundancies. As much as we did everything I just described, we abandoned a few things because it was not really possible to follow through, and we tried, and we're still trying to treat them as fairly as possible. I feel for every single of that, even if they're just a handful. And I've talked with people having had the need and being forced to do that on a much larger scale. Yeah, probably this is the kind of trauma you should share. Not easy to find somebody to share it with, especially because, if I can think of the moments when all this was actually playing live, I had not much time for myself. I was working 12 hours a day on video conference, and after dinner there was the email. So really, it was a crazy moment, but I believe that, yes, there should be more sharing about this thing. There should be more voices, also more point of views, not just the one truth, because there is never the one truth. There are always many. In terms of skills, no, I don't think that this has changed much in the past 12 months. It's just that it made evident certain things that perhaps a year ago were hidden. I've spent the past 5.5 years here in this business and looking at the industry, sometimes wondering, how can people say that thing, or how can that thing exist in the way it is being promoted? And sometimes a year after, I just got as a result. Well, I started to doubt that probably I don't get it anymore. Probably I'm too old. But then most of the times the end result was that gravity reasserted itself, and it just can't. And probably there is a huge amount of wastage in the industry because of people doing things. And you look at it and say, well, that sounds wrong. It sounds wrong. There is something wrong in that. I've been talking with people at any level, like, oh yeah, cool, this is the business model, my idea, my thing, my that. And yeah, but have you looked at it from the accounting point of view? Because you're really messing up that way. So yeah, it's okay until you have to do the first tax return, then you're dead. So okay, nice. It's a quite short half-life for your company. So probably, yes, there would be a lot of value in sharing more. On the other hand, you could also say, we need, if I was a young person, I would say, you know what, I don't care. I want to do my mistake. I want to do my own thing. If I were to listen to every old fart having an opinion on things, by definition, I would not be doing my own thing. There is always a delicate balance. I believe that, again, as I said before, there is not one truth. So probably a person should be exposed to more help for their leadership. Ultimately, if you want to be a leader, there is a cost, and the cost is you're alone, and you will end up taking the decision alone, and the responsibility is all yours. And that's the thing in life. Not everybody is able to live with that, even though probably a lot more people would like the perks that comes with the role of the leader. I always see the half empty glass, not because I'm a pessimist, but the thing is, it's not about what goes well. It's all about the problems. It's all about the things that go badly. I never care. Well, I'm not big in celebrating. That's also a negative thing, instead of always celebrating all the good things that happen. But the thing is, nobody has ever been killed by good news. It's only the bad news that kills you. And even worse, the bad news you don't even know about are the ones that at some point kills you. That's why you need to be paranoid. You always need to be worrying about this thing. If everything is going well, you always think like, well, only because I got COVID and I lost my sense of smell, I'm not feeling the smoke, but in reality, the house is burning. So you always look for something that should be going wrong. That, I think, is the real role of the leader, to eat last and care about the well-being of everybody else. It's hard, but at least it should be known that this is the way it is. Then if you want to take it on your shoulder, then it could be helped. There could be more sharing.
And I think it's a really good point you make, because as I've watched over the years, I think, you know, this I don't want to say generation, but let's say this generation of leaders in the digital space have had the luxury of having things go relatively well. From 2010 on, we all were helping the world to get back on its feet. There were a lot of support programs, a lot of group programs, accelerators, incubators, you name it. But there was still a luxury of having things go relatively well post the last financial crisis. And this is probably the first time they've hit the buffers. And this realization that the buck stops with you when you've not had to be there before.
But to avoid leaving this with a negative message on young people, because I believe a lot in the energy of young people, I have also to say the modern leaders are way better than the previous leaders. With all these things, with the fact that, let aside the fact that probably a certain percentage, big, small, I don't know, more than half, less than half, I don't care, of those are just people wanting to do the thing like entrepreneurs, a lifestyle, or more or less playing the same song and dancing the same with the same moves. The reality is the good leader of today are incredibly better than the good leader of the past. People so young being so knowledgeable, I don't remember having seen. When I was so young, I was not at all so knowledgeable, so seriously knowledgeable. Well, I did my thing relatively to the other people in that moment. I was successful, but it's like saying, it's like an athlete, I don't know, somebody running 40 years ago. Yeah, cool. But then you see Usain Bolt today. Oh, it seems like a Martian. It comes from another planet. I once saw Ivan Spiegel, the founder of Snapchat. He was quite young. It was a few years ago. Talk at a conference. I said, look at this guy. He was incredible, smart, humble, really thoughtful, saying very normal, but very interesting things. And he was like 20 something. So I believe the quality has been growing. There's always been the real good, and a lot of people want to be or whatever, but that's always been true. I believe the leadership is evolving. Version 3.0, 2.0, whatever you want to call it, is better than the previous one. And I have to say, it's very, very tiring to be up to standard as an old leader. That's why I ended up finding something that is at the intersection of so many things, and regulated, and this and that, requires so much experience, because that's the place where I can play my own, and I can stand up to people, because their young energy is less important than my old wisdom, sort of. But apart from some certain niches, it's absolutely very difficult, because the reality is they're very good, and in many other areas where you don't have this sort of handicap of the complexity or regulated businesses or all these things, I believe, as they should be, they are driving the innovation from now onward. And a lot of people should just retire and make space for the next generation.
And I think that's a very good place for us to wrap up. I'm just going to check. I know we had a question. I'm not sure about the question about a cashless society and whether COVID has accelerated that. There was a question about Libra, and that goes back to I guess the same thing about a cashless society or different forms of finance. And maybe that can be the way that we answer that one final question from everyone. I really have enjoyed this, but let's hand over to you, Carlo, for that. So the cashless, has this accelerated a cashless society, do you think, COVID?
Well, strangely enough, it seems to have accelerated cashless society, even to the point where people don't want to touch the banknotes anymore.
I know.
I believe cashless society is much more than fearing to touch a banknote, but anything helps. I believe that more globally, you could say that COVID has accelerated digital transformation. I really believe we got into lockdown in 2020, and we got out of it, and it was 2020, you decide, 3, 4, 5, it really, years passed on that, on a number of different things. And that's that's going to stay with us. So I believe cashless society is just one piece, but the effect of this, well, the unintended collateral effect of COVID has clearly been that of accelerating digital transformation, and And that's as always is as a response of a crisis, even if the crisis is created by something completely different. Well, there is a silver lining in all this mess. Taking nothing away to the tragedy of the pandemic, but as always happened, it has accelerated things that will be good for our future, and that's at least a positive way to look at it. A little bit on the half full glass of, and not just the other.
Absolutely. And I think that leaves us open for another webinar on the accelerated digitization effects from COVID. Banks of all sizes, on finance solutions of all sizes. I'm sure we have other questions that people will be asking from their part of the world that are relevant to that. Listen, I want to say thank you. I want everyone to leave thinking that it's a positive thing. You need to go lean. You need to be able to make new products and services that respond very quickly, and to remember that you as a leader are the bottom line, but that you have to take in the thoughts of your community and maybe blend the experience with the energy of youth as they go forward. Maybe that's the way.
Yeah, I believe ultimately all aspects of one fundamental truth. Diversity is always a positive element. You know, it's just that diversity is the key to evolutionary improvements, and it's been true in biology, and it's true on everything else. So never refrain from having multiple inputs in the thing. The mix of different things is always more powerful than the one truth. At least that's my view. I have to agree.
Carlo, thank you very much for taking time to be with us, with all of us, with hundreds of us, because it's obviously been a very intense time. I've enjoyed it. I hope everyone else has enjoyed it. And we'll see everyone on our next webinar. But Carlo, I'm sure some people will be reaching out or trying to connect, and following the story of Soldo as we go forward. Thank you. Thank you to everyone.
And thanks for everybody for the attention for us. Bye.
Thank you very much. Bye-bye.
Bye-bye.